Hello, welcome to another video by Indicator Vault. And in this video, we're going to go over the justified price zone indicator. And this is on the NinjaTrader platform. And what this does is it takes into account volume spikes, certain volatility with volume, along with candlestick price action and characteristics of that, and it is drawing out these bearish or bullish zones. In this example here, I'm on the NVIDIA 5-minute chart. We've just got some bearish zones that it has rejected price from. And if you go back far enough, you'll see the origin of this bearish zone right there, and it has stayed valid this entire time. And we can see when price finally came back up into it, rejected it very nicely, big push down, retracement back into this new zone, and then another push down. So let's just go over this example here real quick. And you'll see once a zone paints, as we can see, let's say this one, this smaller one that overlaps with this bigger one, we get a sell signal validating this zone. And you will see, with this shade is a little bit different than this shade. And that is because the colors will change basically based off of the strength of the zone for how many times it is being verified and how many times, it is being retested and proven to be a valid zone. So for instance, you see this sell signal that paints this zone, price comes down, retraces back into it, and as it's starting to leave, we get another sell signal after retesting it, retest it again, another sell signal. And so that is just proving the validity of this zone. So if price were to come back up into here, we can reasonably expect another push down because it has been proven and verified multiple times. And you will see zones, even with more than 2 or 3 retest, still hold. And we can see this color because this has not been tested yet. Price, has shown the characteristics along with volume that this zone should hold for a push down, but we have not had price come up to retest it yet. So before I go any further, I want to go into just simple ways of adding another confirmation to something like this. And it's, the classic fib retracements. Find the range that price is in. You see here, I'm anchoring price on this low and this high. So we have this zone that is formed in a strong push away. So around here, we can look for price to retest here, but it doesn't. It continues to push down. So no real clean entry yet. We see a strong retracement. And look, we have this bearish zone in the premium side of the current range. We have the 50% here, retrace right above it, perfect wicks on the 61.8, and then a strong push down. And so that is just one very simple confluence you can use with fibs, finding a, in this example, in the premium side of the current range prices in, finding a bearish zone for it to push off of. And we just see that play out beautifully with this right here. And here we have some more bearish examples here on the Apple 15-minute chart. And I've put on here the 50 and the 100 EMAs. And these are great ones to identify trend, specifically when they cross. So for instance, if we just scroll back here some, we can see the 50 is above the 100 for quite a while, indicating a bullish trend. We see here a steep drop, and we see them now cross. So now the 50 is below the 100. So that's our first filter for looking for sells now, looking for a downtrend and a possible overall shift in trend as well. And then what do we see here? We see the justified price zone find a bearish zone for price to reverse from. So just like in the previous example, we can take a fib, find the overall price range. So we have this high here, anchoring it on this low, this very long wick. But we have the exact same thing. Not really the perfect play off of a 61.8, but the concept of premium and discount is still very much in play. You see the 50% here, and we see a bearish zone in the premium side of the current range. So, the zone is validated here, and, we have some great bounces off here. Another retracement, and then another push down. You could have easily gotten into some trades here as well. There's definitely some confluences. This is a gap and such. But we can see all these retests changing the color, from here, from only one retest, validating this zone over and over until finally we get another big drop, taking out another low. So it is creating another lower low. As we can scroll over here some more. And of course, as it does that, what is it doing? Finding another zone. So if we anchor this, just redo this with just the most recent price range, same concepts. And again, the EMAs are helping us filter out that we're looking for sells because it is indicating a downtrend. Bearish zone. Let me scroll this out a little bit more. So again, I'm anchoring it from this high. This is the new range price is in, from this high to this low. Goes back above the 61.8, but again, the main concept is not these specific levels. The specific levels we're looking for are with the indicator itself of the justified price zone. This is just showing premium and discount. So again, EMA is helping us see that we should be looking for a downtrend. The justified price zone paints a zone. And not only that, the zone is in the premium side of the current range. And again, just is only in there for a few candles before another just massive move down. Would have been a great entry right here. And, a conservative stop loss would have been above this high. A more, risky one, if you're, able to manage your risk and believe in this zone, would have been just above this zone. It doesn't even come close to it. And just a massive drop down. And one last example I want to go over. So we got the Google 15-minute chart here. And if I did what I've shown just recently, if I did a fib here from this high to this low, we do see we have a zone and price does get into the premium side of it. So it does follow this criteria and we do see a nice push away. But one thing to also consider is if we have a large zone, it can be tough to find pinpoint entries. But one thing that I have found to help with this, and you'll just have to, with some practice, start to identify what is, a regular size or a smaller type zone and what is a large zone. For this, I would classify as a large one. You can just take your fib and make the premium and discount of the zone itself. And so That's what I've done, anchored it to the top of the zone and to the low of it. And so marking out the, the premium and the discount zone of it as well. So again, we have the bearish zone form, and we could reasonably expect price to also come up here because it would be in the premium side of the overall range. But as we saw in the last example, it did not get up here to the uppermost range or zone. And in this example as well, it does not get up there. And so just something to refine your levels inside of larger zones. If you felt like taking a trade like this, it would be perfectly reasonable. So here we have the 50% of the zone, wicks into the 61.8, but soon quickly pushes away from the equilibrium level of the zone. You could, very reasonably expect that this gap would stay open with the sell signal in the top of this zone holding, which we very much see that it does. And one last wick before it makes a new lower low. So that's going to be it for this video. Again, this is the justified price zone indicator. Great for finding reversals and very strong zones for price to push away from, and just very simple fib work and even extra confirmations like I've shown with the moving averages of, helping filter out where the trend is. You can get some great entries, and obviously it does suggest, stop loss and take profit levels as well. But even the zones themselves can work that way also. They will be strong zones, so even stop losses above or for bullish examples below will be great risk management levels to put in your trades. So I hope this video was helpful, and until next time, best of luck trading.